Shannon Dahman with Unibell Financial. We were talking today, and so I thought it was really important. We're like the cost of waiting with the rates where they are, and we did some scenarios. You did one for me, which is awesome, and I asked you to do Elizabeth, just to get, not to put too many numbers out in front of people, but this is based on Elizabeth, and I want to have you take it away. And what does this mean to buyers?
Yeah, and I'm not going to get too much in the weeds on this part. We'll jump down and get to more some of the bulk numbers, because that's where it gets exciting. But what you have to look at is that rates are really low, and we know that values are going to continue to increase. All of the projections are that homes are going to continue to appreciate. We're not seeing foreclosure. People who are late on their mortgage right now, it's like 0.3% across the country. And that doesn't even include houses that are free and clear. So if you were really to take all the homes out there, so we're not going to see, I think, a decline at all in appreciation. And in fact, we're going to see the opposite. And in my opinion, I think these numbers are very, very conservative. So if you look at the cost of waiting, and you were to wait for roughly 6 months, you're going to lose out on 2.27% appreciation, plus your
that is conservative, yeah,
principal reduction payments. So when you really start to add things up, it makes a huge difference. Also, what will happen is, they're anticipating rates to stay low for at least the next 6 months. And then they're saying that we're probably going to go into the low threes towards the end of next year. And then, of course, these are just the projections from Fannie Mae and Freddie Mac, what they think is going to happen with interest rates over the next 3 years. And so, of course, your payments are going to increase because now you have to buy the home at a higher price point. And you also are going to have a higher interest rate. So if you kind of look at the bulk numbers, it's really kind of interesting. The payment difference alone, waiting 6 months would be $50 a month. It's not huge, but it's certainly something. And then, but waiting a year, it's going to cost you an additional $200 per month, just because you're buying it at a higher price point, plus the interest. And then $380 if you wait 2 years. And if you wait 3 years, $640. It's quite a bit when you look at it. And then the appreciation you get. You and I both know that homeowners are way wealthier than renters. It just is the way it is. I think the statistic it's outrageous. It's like 240% higher is the net worth of homeowners over people who rent. And so you lose out on this appreciation, but every month you make that payment rather than paying a landlord's mortgage down, you're paying your own mortgage down. So you're putting money into forced savings. And so you can see, just even in 6 months, your net worth would go up almost $18,000 by purchasing sooner than purchasing later. If you waited a year, you're going to lose out on $36,000 of net worth into your bank, into savings for you.
Yeah, this is awesome. It made me think of a question, and I'm sorry because we didn't discuss this at all. But
yeah, jump in.
What about the person who is, and we all have these people that say, "Oh God, I'm going to wait. I need to say I want a little more down payment, or I need to get more down payment." How can we offset that weight of them trying to, get more down payment? What's another option? Would they be better off actually asking for a gift, maybe from a parent or relative, or, help me on that.
Yeah, absolutely. So here's the thing to know is that, the minimum down payment is 3%. And it depends on your qualifications and whatnot, but you're going to be looking at 3 or 3.5% minimum down. And per $1,000 additional that you save and you put down on a house, it saves you $5 per month, or it costs you $5 per month if you don't save that $1,000. So let's just say somebody thinks that they need an additional $10,000 and it's really going to make a big difference. It's only going to make a $50 to $55 a month difference in the monthly payment. So it's not significant. Whereas, if you're talking about $50 a month, let's just use this as our example. So in 6 months, again, you lost $600 because you didn't save the extra $10,000, but you really lost out on this $18,000.
Right.
Good way to look at appreciation. So it's not worth saving. You are better off getting in and having a strategy of getting out of the mortgage insurance and having some different, you have short-term strategies, which is to get into the home for the lowest payment, everything structured the way it's going to work the best for how you need it to be. But then you have the long-term strategy of, okay, I had to put less than 20% down. So now I've got mortgage insurance. How am I going to get out of that? Well, you're going to get out of it because you see this appreciation right here. in 3 years, even in 2 years, you could go back to the mortgage company and ask for the mortgage insurance to be dropped from the loan, because you're going to have that additional 10% that you need. And this is a 10% down scenario. So does that make sense?
You can, yes, absolutely. That, and it's huge. And is that something that they just kind of need to keep track of that, to reach out? When
Yeah. And what I tell a lot of people,
keep an eye on.
Yeah, I don't do as good of a job as I should. I will tell you that. But what I do tell people is,
lot of hats to wear.
I check in with them. I check in with my clients every 6 months. So every 6 months, you're going to get an email from me that says, hey, do we need to do a mortgage checkup? And then that's the cue of, they need to send me their mortgage statement. And then we look at what the value is, and then we can assess. And if it doesn't make sense to refinance, I may trigger them to say, hey, you need to go ahead and contact your mortgage company and ask them about getting this mortgage insurance dropped from the loan and how that would look. And then we just need a market analysis, which is where you come back into play and help us get that value nailed down a little closer, so we know where we really think we are to getting that mortgage insurance dropped from the loan, which then mitigates this payment difference. You get rid of that very quickly.
Big payment difference. Well, this is awesome. I really appreciate it. And I think it does break it down to just let people realize what the cost of waiting can be. And I mean, the moral of the story, I think, after, just kind of talking with you, is like, if anyone's on the fence and you don't know, or you're thinking you want to save a little bit, see what the market's going to do, hey, at least reach out to Shannon. Just it's not going to cost you anything. Reach out to see what your options are. What does it look like now? And she can actually help you look at your specific scenario and how it looks for you if you do wait. And again, we did talk about, if there's some assistance, you want to get a little more down payment, we can talk about ways of doing that as well. So I think this is awesome. Is there anything you want to add, Shannon? Or
just one thing. This is the one thing this report polls. It's very specific to zip codes, which is really nice, because then these numbers are adjusting to really what's projected for those neighborhoods. So like, this is Elizabeth. We could do one for Parker. We could do one for a specific zip code in Denver, Littleton, Highlands Ranch. We can actually dissect it. So if anybody wants one of these, just for curiosity's sake, I'm happy to provide one.
That's awesome. Well, we appreciate it so much. And again, thank you for working with me through this wonderful day. And hope you guys find this interesting and helpful. Again, if either one of us can be of assistance, just reach out. We hope you have a wonderful and blessed day today. Thanks again for watching.